Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Thursday, September 5th, 4:35 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Stay in the market. We're still in an uptrend. The S&P did hold 5,500 in the last minutes of today. We won't hesitate to move that state into a short-term pullback or even to correction if we continue further downward. Market leaders will currently have a sideways neutral arrow with a sub red arrow. We are seeing deteriorating action in the leaders, and we're definitely keeping track of that. Short term, main indexes are below the 21 EMA, so we have a bearish down arrow. Medium term, we still have a green arrow, but we have that yellow sub arrow, and the Qs are red below its 50-day. And if the S&P continues to live below and close below, we will move that arrow to the left. Finally, all the major indexes are above their long-term 200-day moving averages, and therefore we are keeping that arrow at green. So what happened today? Volatility was elevated, and the medium-term trend is definitely under pressure, and we'll get into the charts later. 21 over 21 list, down 0.46%. 7 up, 4 sideways, 10 down. Big 8 is the standout, up 1.37%. And that's why you see the outperformance in the market cap weighted indexes over the equal weighted indexes. RG8 down 0.32%, S&P down 0.47%, RSP down 0.56%, Qs down 0.09%, QQEW down 0.31%, Dow Jones down 0.65%, midcaps down 0.84%, Russell down 0.67%, 60/40 equities bonds down 0.02%, and GROTECTION down about 0.33%. So let's get right into the charts. And as always, let's start off with the S&P 500. As you can see, we had this mini crash and then a V-shaped recovery. And usually V-shaped recoveries do not just blast into new highs. And even if they do, that's usually not the healthiest sign or action. So we started building the sideways range between 5640-ish to 5620-ish. Started to form a handle, started poking its head out, but this Tuesday, this week, we saw a screw bar where we gapped down, fall through, and saw a distribution day. And that had us close below the 21 EMA. Yesterday, we had a tight, about inside day above the 50, but below the 21E. And today, we had a break of, well, we had a rally into the 21E, failed there, and we closed right below the 50-day moving average. But we did still close above that key 5,500 level. And this notched a distribution day as well. And if this continues downward, we're going to revise those trend gauge arrows. All right, so let's quickly highlight the intraday action, as it was definitely a volatile one. We were gapping up. Well, we opened up a bit this morning and had a slight push to 55.46. Then we had a waterfall move, which put in the lows of the day at 54.80. Then we broke out of this range in the mid to late afternoon, put in the high, and then essentially chopped into the close. RSP was weaker today because the MAG 7 was stronger, but overall this index is still definitely much stronger right now, as we're still hovering above that breakout level and still closer to all-time highs than the S&P. NASDAQ, just really weak action after that multi-bar break below the 50, below the 21 and 8. Now we're just sitting here with tight days. And you have this kind of action with the big down day and then tight days. The tightness usually resolves in more downside action. As we talk about, when you have a primary uptrend, after volatility contraction, usually comes volatility expansion to the upside, and that is same for the downside. And right now we're definitely in a short to medium term pullback slash downtrend, building a series of lower lows and lower highs. But one could see all this as also a bull flag, as I've drawn here, or just a shakeout and a handle. So we definitely want to reclaim those lows in the NASDAQ or Qs. We want to reclaim that 55, 65 level, which we've talked about before, that key high of the bearish engulfing. If we do, that would be a great sign. If we don't, definitely more cautious. Dow Jones tested the 21 EMA and held. Mid caps broke the 50-day moving average. Just super choppy action here. You can see some reversal action on the weekly. And once we rallied up to that area, we rejected again and rolled over as well. Russell, pretty much same thing. Breakout, failed breakout, V-shaped recovery, and failed so far. And we're back in the base and below the 50-day moving average. The VIX started to consolidate above 20, and that is not what we want to see. We don't want to see more upside and volatility, as that just creates increasing uncertainty, wider ranges, and definitely not the environment that us trend followers like to operate in. Dollar continues to slide as rates are sliding on the weakening economy and weakening economic and labor market data, as well as manufacturing data. Gold hovering near all-time highs and building a flag. This is super strong action, by the way. Gold miners pulled back in more than gold, found support at the 50-day moving average, but rejected the 8 and 21 EMA today. Silver, just still building this big base. These are the key levels. If we take out the upside, that'll be definitely key. This is a more short-term level to watch out against. Bitcoin, IBIT, I'll go to trading view for that. We put in the hammer candle yesterday, but rejected the 10 EMA, which is on my chart here. And it looks like this weekly is starting to want to break down. We are back below the 40-week moving average. We have been below the 200, 150, 50, and 20. And if the lows of the space don't hold, the crypto halving cycle would be officially broken. And technically already is. We made an all-time high before Bitcoin halving, and we are 5 to 6 months in after Bitcoin halving, and Bitcoin still hasn't made a move yet, which is definitely unprecedented and not according to previous cycle dynamics. Bonds, actually, I'm gonna go back to trading view to give a view on bonds because I have the yields there as well. As you can see, 1 year has collapsed. The 1 year yield has collapsed. Same with the 2 year. 10-year drops has collapsed as well, but has dropped less, and that has officially uninverted the 2 and 10-year yield curve. The 30-year also is coming down a lot as well. And we've been talking about it just on our calls that a long bond, long duration play is definitely favorable here as the Fed is pressured to cut rates. That will quickly drop the short-term rates, and the long rates will drop as well. And so the longer the duration bonds you go long, the more upside you can potentially capture in capital gains. And also, you can lock in these higher yields right now for a long-term period. And that is more of your striving for income, but also you can see some capital gains in the bonds as well. Continue on TLT. We just went over bonds. I'll put on the ZN futures. Really just nice action breaking out of this flag and this bottoming cup with handle base. Bonds look amazing right now. And it's definitely a flight to safety as the economy weakens. Continue on. We talked about the 30-year and the 10-year. So we'll head to the tail of the tape now. As I stated before, still an uptrend because 5,500 held. If we break that tomorrow, we'll revise that to short-term pullback. The VIX still living above 20, which is correctional territory. Over 30, that's more bear market warning area. Fear and greed dropped 6 today, down to 47, still in neutral territory. Bullish readings on AAII dropped 6, still above historical averages. Neutral increased by 8 points up to about 30. Bears actually dropped 2 points down to 25. So more people are indecisive than actually bearish, and that's still below historical averages. And then the NAM dropped 11 down to 70.65, which is still in the upper bounds of that indicator. We are off the bull case now because we are we do have a sustained break below the 21 EMA in the S&P 500, as well as bears are in charge in the Qs as well. Today, the news, ADP came in softer than expected, which further confirms the weaker economy and labor market. Friday, tomorrow, we have unemployment rate, non-farm payrolls, and other labor market data from the government. Coming to the day, the keys were S&P versus the 21 EMA 50-day. We rejected the 21 EMA and closed below the 50-day. Leaders, more or less, were not really supported. Weak action overall. Day count, we went from down one / consolidation ones to, well, I'm going to classify it as down one. 3 days below the 8 EMA, 21, 3 days below the 21 EMA as well. Our expectations are still neutral because we could see an undercut and reversal of that 55-65 area, that bearish engulfing high. But if we take off 5,500, continue lower, then our expectations would likely turn negative. Action, we already talked about that ping pong action all day on the S&P 5-minute chart. And then some sectors that were green, energy, communication, staples, ARK, K, and G were actually surprisingly green, uranium as well, and some Bitcoin miners. Bond prices are up as bond yields were down. Dollar is down as well with the yields. And then real estate, utilities, discretionary were red today, as well as oil and gas. Oil and gas, crude oil futures. Let me go to that real quick. Really has broken down from this huge weekly range. Same with gasoline. And to me, that is telling us that the economy is slowing. There's less demand for oil, gas, and energy now. I mean, that would be pretty good for our gas tanks when we go to the gas station. Today, all we did was buy some Tesla. That saw some RS, and we'll go over that chart after I finish this tail of the tape. So beta 0.84. Tomorrow's keys, we're going to watch S&P versus the 50-day and 5,500. I didn't put that in there. Qs versus 21 EMA, as well as the reaction to the unemployment rate and non-farm payrolls. So bottom line, volatility is elevated today and remains elevated. Medium-term trend is also under pressure. So back to the charts. Give me 1 second. So we'll go over Tesla real quick. Let's start off at a longer term time frame, the monthly. We had like a 3,000% move from like, I don't know, like $12 to 400. And then we saw a 72% drawdown. And this is really starting to get tight. You're starting to have some volatility contraction on the monthly. We really want to then see more tightness on the weekly, which we are starting to see. This high right here, 271 is a key level, and then 300 is really the major key level. You can see the monthly, that would be right there. Now onto the daily, we broke out above this 228 level, a pocket pivot today as well, heading to the robo-taxi event. So took a small position there. RS line also broke this downtrend line. It would be nice to see some more tight action within this base out of a larger term base. Maybe we run up to 271 here, and then we have to put in another handle. But Tesla is definitely starting to look constructive, and this is primed for a pretty big move if we can take out some key monthly levels. So onto the 21/21 list. I'll just review the top 4 or 5 stocks that were up and as well as down. Overall, not the greatest action, but Kava did actually see really good action today with this gap up, pullback U-turn, taking out these 114, 115 highs. After hours up another 40 basis points. So this is nice. We held the gap day lows. That's exactly where we wanted to see hold. The gap up was on highest volume ever as well. Gold miners were up by close low of the day, so nothing too much to talk about there. DoorDash filling out this handle. Looks a little funky, but let's just see how this builds. Volume's contracting, so that is constructive in a handle. SE gapped up, broke out of the base, pulled back to the top of the base. So over 80 is actionable, but with the Qs below the 8 and 21, some of the S&P breakouts, buy into strength is definitely not as favorable. So gotta have that situational awareness and just be able to take some pitches and and let off the gas pedal for now. Coherent tried the rally, closed green, but rejected the 8 EMA. On the downside, Lilly, we had to sell half. Actually, I didn't put that in the tail of tape, so yes, we sold half Lilly as well on this action. They did release some insulin data, and it broke below 21 EMA, so we sold some Lilly there. I want to point out something actually. As you can see, this is what I call porcupine characteristics, where I got it from David Ryan. You got a reversal here, reversal on this day, reversal on this day, reversal on this day, reversal on this day. I was just telling you that it is struggling against this level, so and now you see that we're heading to the downside. You can probably see this better on the 60-minute chart. Reversal here, reversal here, reversal here, reversal here. Porcupine characteristics. Carvana leaking off below the 21 EMA, 821 is about to have a bearish cross, and we'll see if we hold support at the 50. We did have a huge move this bull cycle from about $10 to all the way to 140, 1400% move. EPS has accelerated, now starting to wane here. Race Ferrari, just exquisite action, really. One of the strongest names. Broke out of the space, clean trend above the 8 EMA. We broke that so far, but still above the 21 EMA. Upstart, break below 21 EMA after the gap. Below this 40 level now, it's 38 level. So this is definitely seeing some weaker action. Affirm in its same sector, nice gap up on earnings, taking out 40, but now we're back below it. Finally, Palantir, just meandering around this 30 level, living below the 21 EMA now as well. So that is going to wrap it for today's video. As always, we would like to hear from you. My email is ted@revereasset.com. My Twitter is ted_h_zhang. You can also contact Dan and Don at revereasset.com. Or you can go old school at our phone number, 855-REAL-WEALTH. That is 855-732-5932. Our website is Revere Asset Management, and our YouTube is also Revere Asset. We named our flagship portfolio GROTECTION. What that means is we have a dual mandate aiming to grow assets in uptrend and protect assets and keep us financially stable and intact so we can take advantage of the new opportunities that will come into the future. And if you're interested in becoming a client, please reach out. And with that said, I'll wrap it up for Thursday, September 5th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thanks for listening and have a great rest of your week.